Today you will watch the only video that you need on market structure. As you guys know, I told you I will be learning you everything from A to Z inside of this course. But of course, I want you to have some basic terminology first. So if you don't know what a pip is, if you don't know what a trend is, if you don't know what a trend line is, or anything like that, please go to babypips.com. It's a free website where you can find the basic terminology of literally everything that you need inside of forex trading. If you know all of that, then we can start here. You will learn everything from A to Z, but you will need to have the basic terminology to understand what I'm saying. So today we will be talking about the most important thing of your trading strategy, the most essential thing that you can follow and analyze on the charts, and that is your trend. So you have two scenarios. You have a bullish trend, an upwards trend, or you have a bearish trend, a downwards trend. So depending on what trend yours is that you're currently following, a bearish one or a bullish one, you are going to determine your order. Are you going to take a long position? So are you going to take a buy? You expect that price is going higher. Or are you going to take a short position? You're going to take a sell. You expect that price is going lower. But of course, to know what your trend is, it is very important to know how you can identify the one or the other. So if we come to the charts right now, right here, you can see that I've drawn two scenarios. So on the left one, we have a trend that is going upwards. As you can see, it's clearly going upwards. Point A is much lower than point B. Then on the right side, we have a trend that is clearly going downwards. Point A is clearly much higher than point B. So on the left side, how do we determine that this is an uptrend? Because you can see right here, you could have maybe made the mistake that thinking the trend was over. You are going to determine your higher highs and higher lows. So this one right here, for example, is a higher high. Then this one is a higher low. And we're always comparing it to the previous high and the previous low, because of course it needs to be higher compared to what? Compared to the previous one. So then this one is your higher high, higher low, higher high, higher low. As you can see right here, we failed to make a higher high, but we did make a higher low. And then we succeeded to make a higher high. So it is important to know that even though your high fails to make a new higher high, that does not mean the trend is over. It just means that your internal structure, something that we will go over later, is changing or has some struggles with the current trend due to miscellaneous reasons. So then, as long as you still create a higher low, and this low could have been here, this low could have been here, it doesn't really matter. As long as it's still higher than the previous one, your trend will remain the same. Then on the downtrend, you have your highs, and then you have your low. You have your lower high, a lower low, lower high, lower low. As you can see, a lower high, a lower low. And then what happens? We failed to respect this low right here, but we did respect the previous one. So we still create a lower low compared to this one, but we made a higher high compared to this one. But remember, what did I say? As long as one of the two is still intact, it still remains valid. So then we create a new lower low right here, lower high and lower low. So then we come to the next thing. How are we going to trade these trends? Whenever you see a high gets broken or a low gets broken, this means there is a break of structure. Because this was your current structure, this high right here, and it gets broken. So it's a break of your structure. What do we always need to have in the back of our minds whenever this happens? Whenever a break of structure occurs, expect a pullback. Of course, the pullback does not have to be right here, for example, or right here. It can take a while, like this one, but always anticipate that pullback. And this is one of the easiest things that you possibly learned about trading already, is that whatever goes up also comes down. And that is exactly what it is right here. If you ask like a teenager to draw a chart, he's not going to draw this. He is going to draw this. And why does he do this? Because he knows that whatever goes up also needs to come down to make it even. It's just supply and demand, it's just basic economics, and it's basically just pure logic. So whenever a high gets broken, expect a pullback somewhere, expect a turnaround to come in, and be prepared for that. And of course the same for the other side. Whenever a low gets broken in a downtrend, you have a break of structure, expect your pullback to occur somewhere. You have a break of structure, expect your pullback to occur somewhere. Break of structure, expect it to occur somewhere. So this will be the first indication of your strategy and the first thing to look out for, that break of structure. These two examples look pretty perfect and pretty going forward and pretty easy, right? And if I go to the charts, it does not look anything like that, as you can see. Now, how can we define the right highs and the right lows? So then we need to know swing structure and internal structure. Because swing highs and lows are basically the only two that matter. And price can do whatever it wants in between those 2 points. As long as the swing high hasn't been broken, we remain bearish. And vice versa, as long as the swing low hasn't been broken in an uptrend, we remain bullish. So how can we identify these highs? How can we find which one is a swing high and which one isn't? Let me draw this out with another example for you. Now, this looks a little bit more like the real life markets, right? And I just started drawing out randomly. I just drew it like, it looks like a bit like the real charts. I bet open an uptrend on EURUSD and you'll find a pattern like this probably. It's just all over the place. But I made this for practice. How can we identify the right highs and the right lows? So, of course, right here you can see the highest points, the lowest points. But is there also a strict rule for this? Yes, there is. So in an uptrend, your swing high will be the highest point that created a significant pullback. So in this case right here, let's just start off together and let's start marking everything out. So as you can see right here, this is our swing high because this is the highest point that created a significant pullback. Now, how do I identify a swing low? A swing low is the lowest point that broke that previous swing high. So for us example right here, this swing high got broken exactly right here. This will break our structure, remember? Break our structure. So then this automatically becomes our swing low. Not this one, but this one. Because this low failed to break the high, this low failed to break the high, this low succeeded to break the previous high. So then we have to identify our new swing high. As you can see, this will become the highest point to create a significant pullback, so this will become our new swing high. Then our new swing low, again this one, because this is the low that broke the previous swing high. Then we come to the next example, of course a swing high, and then our swing low. What is our swing low in this case? As you can see, the swing high did not get broken right here, it only got broken right here. So this is what a lot of people confuse themselves with, is that they are going to see this one as a swing low, as this one really gives that push upwards. But it is really important to see this one as a swing low, as this one was the deepest point before that whole move occurred. So then again, we have our swing high right here because this created that pullback, and we have a swing low right here. I think so far everything is with me, that this is a pretty easy setup. I think it is pretty easy to identify the swing highs and the swing lows. And this can be on every time frame, guys. This can be on a 4 hour, this can be on a 1 hour, this can be on a 15 minute, this can even be on a 5 minute. It really depends on where you're taking your entry on. But how to use this with multi-time frame analysis and how to use this for your entry, that is something for another video. First, we need to get the basics in. So in every trend, we have strong highs and weak highs. We have strong lows and weak lows. In an uptrend, the lows are considered strong. Why are these considered strong? Because these lows are the lows that break the previous high. So in a downtrend, it is the exact opposite. There are the highs considered strong, as we are targeting the lows to be continuing our structure. As you can see in the example right here, these highs will become strong because these ones are the ones able to break the previous low. Highest point that broke the previous low, so this one will become strong. So to make it really simple and to really oversimplify it, to explain you what the purpose is of the strategy, we will be trading from strong swing points and we will be targeting weak swing points. So what we'll be doing in a downtrend, we want to sell as close as possible to the swing high, we want to target the swing low. So we'll be doing in an uptrend, we will be entering as closely as possible to the swing low and we'll be targeting the swing highs. It is really important to remember that the trend is your friend. You will be always wanting to trade with the trend and never go against it. Because I've made the dumb mistakes to do the exact same opposite and sometimes or go for the counter trend while we're in an uptrend or trying to predict the swing high while we're in an uptrend. And that is something that you just don't want to do. You want to be buying as closely as possible to the swing low, or you want to be selling as closely as possible to the swing high when you're in the downtrend. Because you always have to remember that the only job that these swing points have is that the swing low needs to break the swing high in an uptrend and that the swing high needs to break the swing low in a downtrend. But then already here you're thinking, what happens when we go the other way around? And that is a very valid point. So let's say for example, we do this right now. As you can see, the trend has shifted from bullish to bearish. We started creating new swing lows, new swing highs, but of course, then what? So first of all, you need to understand that what happened right here was a market structure shift. And a market structure shift happens as soon as the swing low gets broken in an uptrend. So your strong swing point becomes a weak one and your weak swing point becomes a strong one. Because now this swing low right here has become weak, as this one is a swing low that got broken, and this swing low right here had become strong, as this one was the highest point to break the previous swing low. It's not a swing point right here. And then we have our market structure shift right here. But as you can see, it is only a market structure shift until this swing low gets broken right here. Everything that happens in between, it doesn't matter. We basically still remain bullish bias until this low gets broken right here. So it is very important to understand that you always want to trade with the trends and you don't change your opinion until basically facts are given and the swing low gets broken or your swing high gets broken and there is a market structure shift. So that was swing structure. Now we are going to internal structure. So if, for example, this is what your swing structure looks like, then your internal structure probably looks something like this. As you can see, a lot more movement, a lot more volatility, and a lot more reasons to maybe let traders believe that we go the other way around. So what is very important to know is that these are also trends on its own. So we have a swing trend that was a downtrend that moves like this. It's basically this picture right here. And then we also have our internal trends. So we have a downtrend right here. We have a downtrend right here. We have a downtrend right here. But we do have also uptrends in between. Uptrend in between. And then you can do two things. It's one, trade the counter trend. So trade it the other way around. Or you can wait for the perfect place to sell. But in order to find this perfect place to sell, you also need this small structure. And how we find the perfect place to buy or the perfect place to sell is something for another video. But market structure is one of the vital elements of it. So this is called your swing structure and this is called your internal structure. Whenever your internal structure shifts, so as you can see right here, it goes from bearish to bullish, it goes from bullish to bearish, it goes from bearish to bullish, and then again from bullish to bearish. Whenever that shift happens, we call it a change of character. And I'm going to show you exactly what that looks like. So a change of character is basically the same thing as a market structure shift that we had on the swing structure, but then on the internal structure. And remember what happened for that market structure to occur is that we broke the previous strong swing point. So in this case right here, this was a strong high, as this one was the high that broke the previous low. As you can see, this one was not that important, but this one was. As this was the new high that broke the previous one right here. So what does this mean? This becomes your new internal high, and this becomes your new internal low. Then we create higher lows, higher highs, until at one point we shift again. So right here, you have your high, and this is basically the highest point of this bullish pullback. And then all of a sudden, the previous strong low gets broken. You have your new internal low right here, internal high, internal low, and internal high. Now, why is this interesting for us? Of course, whenever this one gets broken, it aligns with the swing structure. Whenever that one aligns, you can take your position. Make it something like this. Target the previous weak swing point. That was this one right here, and that is your trade. Now, some people also like to include a third structure, and especially the people that are following SMC, and that is fractal structure. So fractal structure is even smaller than the internal structure, and you'll be really focusing on places in the market like this. You'll be focusing on small pauses in the trend, and it really gets used to indicate the start of that internal pullback. I think it is not that relevant since we trade on the higher time frames. Maybe the lowest time frame that we go to is the 5 minutes, and mostly will be going on the 15. So I'm only using 2, and I think this is also a lot more easier for you to follow along. So to sum everything up, it is really important to trade with the trends, to follow your swing structure. In an uptrend, your lows are considered the strong ones. In a downtrend, your highs are considered the strong ones. You only know that a pullback has started when you have that internal break of structure right here, that change of character. And you only know when a pullback is done when you have again the change of character right here with a strong impulse to the downside or upside, depending on your swing structure. Okay, so then let's go to the charts. Let's go to the candlesticks right here and let's indicate what we just learned on paper and implement it on the charts. So as you can see, we are on an uptrend right here. This is the lowest point that broke the previous high. This is the highest point that created a pullback. Lowest point that broke the previous high. Highest point that created this small pullback right here. Then we have our highest point right here. So then that means that this is a break of structure, that this is a break of structure. So as you can see right here, we're flying off, and it's very difficult to trade for us as we don't know how deep the pullback will be. So I want to focus on this bit right here. It is a bit more consolidating, and I think there is a bit more action as we also come from a downtrend right here. I can basically show you everything that we've learned in this example. So this is our swing low, and this was the previous swing high. So the previous swing high right here gets broken, and this is our market structure shift. So we have a market structure shift right here as the previous high got broken, and this creates our new swing high. New swing high. Then we will search for the deepest point in the market that broke the previous high. That is this one right here. Then we mark out the high that breaks our previous one. That is this one right here. Then this will be our break of structure right here. So then we are going to look for the internal structure and basically how we can trade this more in action. And that is right here. So as you can see, we have a market structure right here. So this means that this will be the first point that we will be looking for buys for the whole time that we came out of this downwards trend right here. Now we will be shifting our bias from sells to buys. But then, of course, where are we going to buy? We want to buy as close as possible to this area right here. I will be using some tools for this, but I will go over this in another video. But then, okay, let's say we're strictly using market structure. The first thing that we learned was expect a pullback whenever a market structure or break of structure occurs. So right here, we're not going to buy, we're not going to sell, we are just waiting for that pullback. And yes, of course, you could sell, but it is a bit more advanced. Then you have your sell-off right here. You remain basically selling until what? The internal structure gets a break of structure and basically creates that internal market structure shift, that change of character. So then right here, you're waiting, you're waiting, you're waiting. Bam, this high here gets broken right here. And this is your change of character. Then from this point on, you'll be looking for buys only because now your internal structure is in the same direction with your swing structure. Then what goes for entry, you can use a lot of things for this. You can use order blocks, you can use fair value gaps. We will go over all of this in other videos. But let's say, for example, right here, you have a very nice entry on this fair value gap. You put your stop loss underneath it. Then what I always like to do is to target a 1/2. So this will be your trade. Or you can target the weak swing structure right here. And this will be your bigger trade. That got stopped out right there. But of course, when you're taking this trade live, put a bit more thought in your stop loss and you'll take profit. Then we get to our previous high again with the break of structure. So what do we do then? We expect a pullback. So waiting for price action to give us a change of character. That is right here. This low gets broken. Then we know, okay, the pullback has started. Then with the sells, basically we keep on selling until this point right here. So then right here, you have your high and your low, and this one gets broken right here. So this is the first internal break of structure, the first change of character that we see that aligns our internal structure with the overall trend swing structure. So change of character. Then what do? We want to buy as closely as possible to the previous low, to the internal low in this case, that is right here. And then this could be your buy position. You could target the first internal high right here, or these internal highs, or you can go for the swing structure right away. So to make everything more clear and to help you better understand this, there will be a homework paper in the description. Please fill this out and then send it to this email right here on the screen. If you do that and you want to, we are going to review your homework, maybe make a video about it, maybe do a live stream, or we'll just straight up answer you on the email. Of course, I already know that there will be a lot of answers, so if I can't get to yours right away or at all, don't feel down about it. Just go further with the content and just try to fill it out as best as possible. Guys, I hope you enjoyed this episode. I hope you learned a thing or two, and I will see you in the next one. Bye bye, guys.